In 2014, we got some good news and we got some bad news.
The good news, the housing starts, new construction housing starts are up at their highest level since 2008.
And the bad news is if you don't have 20% to put down and impeccable credit, it's going to cost you a whole lot more. Happy holidays, everyone. It is holidays,
yes,
right?
Yes, it is.
My name is Barry Horvath, and this is Moving Forward TV, your local market update.
And as we are winding down 2013, I am DeLynn Gaston. Thanks for joining us today. We're going to touch base on some of the good news, bad news that is coming up in 2014. Yes.
I have a
you
question.
Sound just like your thing.
I do. I know.
Wow.
I just got a text message.
You nailed that.
I just want to know. We're going to cover good news and bad news.
Yes.
And just so I'm clear, I'm probably going to be the bad news. Am I right?
Well, you're better at delivering. You're better at being the bearer of bad news than I am.
I give the soft blow.
I'm blunt.
Okay.
You're softer.
Okay. All right. So let's talk about the bad news then.
The bad news.
Or do you want to talk about the good news?
Well,
no. Let's talk about.
Some stuff is good, some stuff is bad.
Just be quiet for a minute. The bad news is,
wow.
If you are a football fan,
yeah, even my husband is going, wow.
Your team probably didn't win this weekend that you wanted to because there was a lot of upsets around the NFL.
Yeah, so I heard.
Oh, really? You're really
There was
into
a lot
this.
of it.
All right, you have no clue.
You've been bummed out. My husband's been bummed out. My kid's been bummed out.
All right, let's talk about the real bad news.
Yeah, the real bad
good
news.
So basically, there's a lot of changes coming down in 2014, and you probably want to know about them if you're in the market for a house, or if you're in real estate, or you just want to know what the heck is going on in this world. So we're here to tell you about some changes, and some are good, some are bad. I'm the bad, she's the good.
Well, not necessarily. It's going to be mixed, because I think like the first one here, they call it the ability to repay. I do think it's a good rule.
Okay.
The ability to pay rule. It's definitely a good rule. But what it means is that the debt to income ratio is being lowered.
Yes. So
down to 43%.
So basically, in layman's terms, for those who don't know what 43% is, if you made $80,000 a year, the maximum approximate debts you could have with all your credit cards, car payments, your taxes, insurance, everything, is probably about $2,800 a month.
And just for a point of reference, we used to be able to push that number a little bit higher.
Right.
So it's going to cut into your qualifying, what you can qualify for a new home.
Yeah, you could qualify for like $80,000 a month in the old days.
But on the bright side, it's going to be much easier for you to make your payments. So
because you'll have less?
Yeah. Yeah.
Oh, you are the eternal optimist. Okay, you're going to get less house, so your payment's going to be lower? Gee, thanks. So you live in a bungalow instead of the Taj Mahal. That's really good news.
But you can afford it.
Okay, great.
Yay.
All right, next thing is mortgage credit card holders both must be clear about where your money goes each month. They have to provide you with a precise statement, meaning escrow breakdowns, penalties, any special fees. No more mystery to where your money goes. So
that was nice. That was a good news. See, you did a good news. That one's good.
No, it's bad news because now I'm going to know where my money is going, and I really didn't want to know.
I know. This much to interest,
yes.
This much to principal.
Exactly.
All right. Next, rate changes. Anytime there are rate changes on your mortgage or on your credit card, they have to let you know ahead of time.
Yes, they do. They have to actually put it in writing to you. So when you have an adjustable arm now on a mortgage, they have to notify you like 240 days in advance of your rate change that could happen.
Right.
And on a credit card, they also have to notify you. Now, on a credit card, you can actually reject the offer and say,
new terms,
I don't want the new terms. So what do?
I think that's kind of funny.
I think they take your credit card away, but you can reject them. You still got to pay, mind you.
Not so much on the mortgage, though.
No. If you reject the mortgage terms, I think they're going to probably foreclose. So that's
you're out of the house.
And the other thing coming up is, of course, the new rule starting January is total lender fees cannot exceed 3%. That is combined lender origination fees, points, etc.
For mortgages and such. So that's good too. Okay, the next one. Lenders cannot offer, no more, can they offer any interest-only loans, any teaser interest rates, or any negative amortization loans. Those were a lot of those crazy loans that kind of unfortunately got people into bad situations where the payments were skyrocketing or the balance of their loan were increasing. Will you stop?
Well, you said crazy loans.
The balance of their loans were increasing instead of going down. Their balances were going up, and those were called negative amortization. No more, out the door. I mean, we haven't had those in years, but now it's
like
law.
the old coffee loans, World Savings loans.
Now it's law.
Cozy loan, it's
Carved.
law.
It's in ink.
It's on your
It's there.
printed paper
It's
right
on
here
my-
that just came out.
I read it on the internet.
All right. So it must be true, right? All right, missing payments. So for people struggling out there, now banks must actually, if they have workout programs available, they must offer that to you, and it must be within 45 days of when you missed your first payment. So now when you skip a payment, you can count on, in the mail, you're going to get something that says, hey, we have a workout program. Here's how it has to
Right.
work on it.
Right.
And the more bad news about that is they got to tell you in 30 days what the decision is on that program.
Right.
Do you qualify for this modification or this workout? So
Right. And see, I'm doing a bad news one now too. On the bad news, last one on this particular part, on the bad news section of that, if the homeowner fails to apply or contact the bank about a workout option, then the bank or the lending institution can, in fact, start their foreclosure proceedings within 120 days of the missed payment. Right now, just to kind of give you guys a point of reference, it takes approximately 414 days to do a foreclosure.
I know people that are living in their houses for like
Many years.
Yeah, long time.
Yeah.
So 414 doesn't seem abnormal,
know.
but they're starting to speed up on the foreclosure. So, and now for the really bad news that you've been waiting for.
How did I end up doing the really bad news?
I introduced you.
Normally, you're right. You did the really bad news. Okay. Starting in April of 2014, big fee increases are coming down from Fannie Mae and Freddie Mac, which is owned by...
Now, Fannie Mae and Freddie Mac, for those of you who forgot, if we haven't beat it into your skulls enough, they do about 2/3 of the nation's loans today.
Yes.
So it's a big time hit for anybody not putting down at least 20%.
Right. And like we said, with impeccable credit, because it's really coming down to, it's even the higher credit score people that are going to be most impacted on this. And we say higher credit score people, 700s and up, has typically been very good credit.
Not anymore.
Yeah, it's getting pretty sticky. Now the threshold seems to be 780 and better is where it's least impacted on your interest rates. What happens is basically FHFA, Federal Housing.
Fa-fa.
Yeah, fa-fa.
Fa-fa-fa.
Anyway, they own Fannie Mae and Freddie Mac. They are the ones who are instituting this higher fees. And I guess, the bottom line comes down to, they used to think that the higher credit score borrowers were least likely to default. Well, I guess they're starting to look at that a little bit more, and you got to go even a little higher on the credit scores, and that's why.
You got an example of how much they're going to go up? Like somebody putting down 10%?
How much are they going to go up? I guess. Do we need an example?
Yeah.
If you are putting down 10%, that's where the biggest impact is, it seems. If you're only putting 10% down, your credit score is about a 740, just to give you a point of reference. Right
Which is
now,
really good credit.
Right. There's about
opinion.
0.25% built into your interest rate for that. It's going to be about 1.5% built into your interest rate. Now, that's not tacked onto your interest rate, but that is a lot. That is definitely going to have a huge impact on your qualifying, on your interest rates and things like that.
That's
Although the
huge.
government's keeping the rates down, this is definitely going to affect the interest rates.
So we got the highest new construction starts since 2008, so the market's really fueling up.
Right.
We got rates that are definitely going to go up in April.
Yeah.
I have a suggestion.
Buy now!
I got more bad news. This is the end of the show. And this is where we say, Merry Christmas, everybody.
Merry Christmas, everyone. But we want you to share this show. Please get this out, because these are great changes that are coming in 2014, and everybody needs to know.
No, they're bad changes for 2014.
Well, some are bad, some are good. But we are keeping you posted, right?
Yes.
Keeping everybody informed.
Get us out there, Facebook, Twitter, YouTube, share us, like
all
us,
that stuff.
forward us to your friends, call your mom, tell her you saw this great show with these two people. Just get us out there.
And tell her Merry Christmas,
Yes,
Happy New Year, all that fun stuff.
Yes, absolutely. Merry Christmas, everybody.
Thanks again, everyone. Have a great Christmas. We are today and every day.
Moving forward.
We will see everyone next week.
Ta-da!
Bye. you.